I'm Nathan Nichols. I'm going to introduce myself as the Texas Blockchain Council chairman first, given the event, and then I'm also co-founder and president of Rhodium.
I'm Christopher Friedel, and I'm with Alta 3X and with the Texas Blockchain Council as well. So,
Awesome.
Yeah, have the quick talk and just share a little bit about your story, background, what you guys are doing now, and talk a little bit about the industry, just your outlook on the industry. You've been around the space how long?
Since early 2016.
Okay.
So really, Ethereum run up. Starting that, I think when I started, Ethereum was like $5 or $6. Everybody says, how'd you get into Bitcoin? I actually got into Ethereum first.
And then you got orange pill later?
I did.
Okay.
Yeah. Actually, I went full circle. So I think a lot of people do, but I was like, okay, proof of stake, faster, more efficient, energy. And then I went to validation, security of the chain, grid stabilization, definitely got orange pilled in that process. And now I think, Bitcoin is one of the largest incentives of renewables in the world. So
yeah, it really supports. I mean, you see a lot of what's happening in the energy space where it can support, energy companies that are, the cost of production is negative in some instances and can help support that.
Yeah, I mean, Shell just put out an article about how much deeper they're getting into the space, their decarbonization initiatives, and how that, in my opinion, parallels directly with Bitcoin mining. So there's a bunch of different large energy conglomerates, and what's awesome is once you get one, everybody's like, well, what's this? Why are people looking into it? So I think over the course of the next 1 or 2 years, you're really going to see almost all of the major energy players from a global presence coming into the fold.
Well, I think if you have the energy, if Bitcoin is retained energy in essence, and as Michael Saylor talks about, and you have the energy companies, it makes sense to go straight to the source. If you're mining, the mining is one step removed from the energy itself, and so creating that partnership with those energy companies, is that something that you guys are looking at doing?
Absolutely. Yeah. Very deep into it already.
Okay.
But yes, the going direct to source eliminates counterparty risk.
Mm-hmm.
So, these large energy conglomerates, they serve as the physical load. They serve as the QSE, qualified scheduling entity. They serve as the REP. So every single step, normally you'll have some, custody or collateral risk from each transaction that goes through. And, they have to be segregated just because of regulatory reasons to make sure that there's not self-dealing. But if you have, entities that are in sister companies or are put together, you basically are talking direct to source to the ultimate decision maker. And then if you're doing a deal with them, what people don't realize is some of these miners, the notional value of these contracts are hundreds of millions of dollars. So it's quite literally the largest single financial decision, I think, that you can make as a miner is who are you partnering with and what does that package look like?
And it seems like some of these energy companies having conversations, they are somewhat waking up to the idea of that counterparty risk. They may be able to get a contract that is, perhaps paying a higher price for energy.
Yeah.
But if your counterparty is not around when the market tanks or contagion goes through the system,
yep.
What is the value of that? What is the real value of that contract?
Yeah. I mean, as an industry, I think we're growing up. I think that, the parallels of what's happened recently with Mt. Gox, I actually think that self-custody is really going to come into the fold. I don't know if you saw, but Trezor had a 300% increase in revenue. Yeah, exactly.
Surprise,
for self-custody. And, all of our, these true Bitcoiners, which I consider myself to be, we're always saying self-custody.
Yeah.
Doesn't matter which exchange. It doesn't matter what the public purview is. You just got to self-custody. And so, luckily, I was banging the table, being the super annoying person. We're close to Thanksgiving. On Thanksgiving, telling my family, you have to self-custody. You bought for Christmas, everybody a Trezor. And now, everybody's happy that happened. They're sleeping well at night.
Oh, no. Yeah. You look at it and it's really interesting seeing some of you use the term, a real Bitcoin, what'd you say? Real Bitcoin or Bitcoin maxi,
yeah.
Right? And it's, what is that? Cause you hear a lot of people that were real Bitcoin maxis, and you know, they're pushing different exchanges, which then there's a derivative of derivative. You know, it's you know, BlockFi to it's BlockFi or well, sorry, not take out any names, but it's derivative, and ultimately the end party is longing Doge. And you know, Bitcoin maxis didn't know that they were somehow participating in that.
Yeah, you know, it's liquidity risk, it's counterparty risk. You had, you know, we just saw wrapped, you know, Bitcoin that was used in order to stake something else, or wrapped Ethereum, and like all of those things went to zero or close to zero. And it's because you got to make sure that you have the underlying asset. And so, like, why do I believe in Bitcoin so much? One, like, it is real costs. It's real energy costs. It's real operational costs. Like, mining is a tough business, and it was easier, and, you know, for a long time it was the black sheep of the crypto industry. But, you know, the proof of work is something at Rhodium we always joke about, because you got real trades jobs, you got plumbers, electricians, welders, heavy construction, energy, like all of that coming together to create this underlying currency. Versus if you're looking at other protocols that are proof of stake, you're creating it just like shares, like out of thin air, and then it's up to the entity or the organization to show what that value is. But the second that Bitcoin is created, that value has already been shown.
Yeah, there's a lot that goes into it. It's the boring stuff where people are like, well, it's not as exciting. It's boring, and you know, but that's what you're doing. You're actually going out there, you're building something, you're going and you're tracking the energy, you're tracking it from, you know, energy that's being wasted or underutilized, and the marginal user of that, and then allowing, by building that out, you're able to help energy companies expand their operations.
Yep.
And more accurately predict their, you know, their cash flows, that, you know, if they're not negative on some of the energy that they build.
Well, so that's one of the things on the energy side that, you know, I particularly enjoy is, so you have this congestion that's happening on the grid, right? A lot of people, you know, long-term decarbonization is what we need, right? But the technology isn't there yet. And so you need to make sure that you have profitability for these base load suppliers, these natural gas producers, because, you know, unfortunately, as you've seen in Europe, if your natural gas goes away, you have extreme volatility that then impacts whether or not people can keep the lights on, can stay warm. We're going into the winter in Europe. Luckily, we've had an unseasonably warm beginning of winter so far, but they only have so many reserves that are coming out that need to be shipped in order for them to stay warm. And there's only so much storage that can be there. And so, you know, you talked about wasted or underutilized energy. What people tend not to realize is that energy is a business. Those businesses need to stay afloat in order to keep this energy consumption capability to these Texans, to Americans. And so, you know, I would say wind and solar, they have these long lead times for ROI, but they have these government incentives. And those incentives kind of put things in the power market out of whack, which is why you'll see grid congestion. And so when they're out of whack and there's grid congestion, what that means is power is going to go negative. And going negative means that it's not profitable for enterprises that need cost in order to produce that energy. So
now let me interrupt you just for anybody that doesn't understand. How does that? Can you go through how it gets negative?
Yes. So
how does that occur? Why does it occur?
So if the sun shines, you can't stop the sun from shining. If the wind blows, you can't stop the wind from blowing. And so when you have a base load, you know, that's generally natural gas or oil, and there's always a cost of creation. And so because of that, you're not as frequently or likely to have a negative cost because that energy, the production of it, has a cost. The point I'm trying to make is that the base load, you know, whether it be batteries, whether it be, you know, Bitcoin mining, there's not enough base load currently to cover the intermittency that happens from renewable energy. And so Bitcoin right now, we just sat down with Governor Abbott, Senator Ted Cruz. We have about 1.2 gigawatts on the system. and we want to produce another, 2-3 gigawatts on the system over the course of the next couple of years. And I think that that is the more likely number now with where Bitcoin is today. And there's not a ton of capital just flowing freely into the space. But people look at that and they say, well, you're using or wasting so much power. And what we say, which I believe is the truth, is we actually have 3 gigawatts of 70 gigawatts that are out there. For simple math, let's say it's 3.5 gigawatts over 70 gigawatts. That means you have 5% of the overall energy consumption on the grid that can turn off instantly. And so when we had this last winter storm that happened, rhodium turned off, a lot of large miners turned off. We got to supply a gigawatt of power back to the grid that kept rolling brownouts from occurring.
And that gigawatt would not have existed.
Would not.
Without rhodium being the base demand, that
Correct.
Marginal demand,
Correct.
The marginal buyer of that.
So now you have these energy conglomerates, whether that be, and I'm just going to name a couple that are in the public purview, whether you have Nextera, whether you have Shell, they're saying, hey, I know what the cost of production is for Bitcoin mining. I know what they'll use on the base load. More importantly, if it doesn't make financial sense for them, they'll turn off. And so now I have a long-term purchaser of this base load. And so it incentivizes renewables to come online, because if you had grid congestion, you don't want to build there. But if you know that a miner is coming in with 200 or 300 megawatts, of load to consume, then it makes perfect sense. There is the other side of that financial initiative to build there.
And if you don't have, that, like you're saying, if there's not the demand, they can build the renewable, the renewable producer. But if there's a mismatch between production and delivery, then then they're not going to build. They'll end up putting it in. It'll be negative. It'll be a negative investment. And so by having Bitcoin miners that come in as the reliable buyer, maybe they're not paying the most, the retail rates for energy, but they allow for the entire system to simply exist, so that when it is needed, it can be, the rhodium can shut down and can supply that back to the grid.
Absolutely.
Back to the retail space.
And we've worked very closely with the PUC, with ERCOT. Lee, the president of the TVC, has done a fantastic job getting these regulators and the governor here to understand we are price sensitive. So we have an initiative now that's the Large Flexible Load Task Force that says, hey, if there's a certain amount of megawatts that are on the Texas system, we will turn off. And so then the consumer or the overall just public purview would be, okay, these guys have a signed document. The largest miners in Texas have all agreed underneath the TBC that we will turn off below a specific amount. So they know it's signed that we're not just trying to make money. We're trying to make sure that we're stabilizing the grid, which is to the benefit of all civilians.
It's a win-win across
Absolutely.
the board. It increases the robustness of the Texas grid, the amount of power that can be supplied, at any specific point in time.
Absolutely.
If there's an ice storm, if there's, for whatever reason, it's that capacity to go back into the system.
And the beautiful part is these renewables. I've had a few people in energy said right now, if you build solar, you can't lose, and that's because there are so many subsidies that are given by the government. But I don't necessarily think that you need subsidies by the government. You need incentives from this, capitalistic free trade economy. And so Bitcoin is the natural incentive. It is the natural subsidy. You don't need to use taxpayer dollars in order to incentivize people to create renewables. You just need to allow Bitcoin miners to be able to pull that energy again when it's not being used, when it's not being utilized.
And but whereas before you would have in the energy space, you would have a client that needed to be in a specific geographic location.
Yep.
Bitcoin miners can be in the middle of nowhere where the demand is lower.
Yep.
And so it just increases that robustness, adds to the strength of the system.
Yeah. I think that there's, in the panhandle of West Texas, there's a lot of congestion. And if you look at, the township the mayors of those towns. They're saying, hey, we finally get to pull from this congestion. And so what's that going to incentivize? More building there, more jobs, more stimulus. And so they understand it because it's the number one thing that is the tax revenue generating item for their county. And so one of our facilities, the population is less than 7,500 for that town. Another one slightly bigger, but like, yes, you're going to places where, again, all of the raw inputs need to be less expensive. Mining is ruthlessly efficient, and it's not just an energy cost, it's in land cost, it's an infrastructure cost. And so, you know, we'll go to the places where it is cheapest. And what that means is if it's cheapest, again, just to hammer the point down, it's not being fully utilized.
Yeah. And if as the energy price, as there's a mismatch on that energy price in areas where it is used, that further incentivizes transmission to go in to where that production is.
Yeah, I mean, Rhodium just put in a 300 megawatt interconnect for an FEA transmission line, and that was paid by us. That, you know, that's private dollars going in and paying for this thing. That then in the future, if we leave, you know, Encore is there. This is built off of an Encore line.
Yeah.
So you don't, again, need a subsidy. You'll have somebody that will pay for it because the incentive is there. And what's that doing? That's stabilizing and building additional infrastructure that can go on the lines, that's going to allow for more free flow, less transportation, distribution charges to happen on the system, which benefits, again, all civilians.
So it's not just Rhodium as the Bitcoin miner trying to generate profits. You win really by integrating, aligning the interests of retail users, of government interests, of, you know, what's trying to be built, and also on the mining side.
Absolutely. I think what I love about the politicians and government officials that I've met in Texas is they'll hear, at least in my case, they will hear public sentiment. And then they'll offer you a forum to communicate and speak with them. They'll allow you to explain why you believe that your perspective is right. They allow themselves, more importantly, to be open in this education process because of just what Texas stands for in general, which is freedom and job growth that can benefit all civilians.
Personal responsibility. I think what I'm hearing you say is that Texas is Bitcoin mining country.
Absolutely. Come and mine it.
Come and mine it. I think that's good. Do you have anything that you guys have coming down the pipeline? Two things I actually want to touch base. Anything that you have coming down the pipeline, and then from a philosophical standpoint, any lessons that can be learned recently with recent events? Not to speak to anybody personally, but or individual companies, just from a philosophical standpoint of something that might be hammered home right now.
So we're in the middle of a public transaction. So I've been trained to say we can't say anything that's not already disclosed by to the SEC. You
can just stay away from Rhodium. Let's stick with the philosophical standpoint of
that's much easier.
There's a meltdown in the business right now. There's been a forest fire. The strong oaks are still standing.
Yep.
Some of the smaller saplings have been taken out. From a philosophical standpoint, though, if someone's in the space, what would your message to them be right now?
Bitcoin is a cyclical commodity. It's a cyclical business. You have to have ruthless financial let me see. You just have to be ruthless with like financial debt to equity ratios, leverage in general. I mean, our
financial prudence.
What'd you say?
Financial prudence.
Yeah, financial prudence. There have been a lot of opportunities to take easy money for a lot of the miners in this space. I mean, when everybody's making 50, 60, 70, 85% profit margins, when Bitcoin's 65,000 and money's free because of quantitative easing, you know, money's there, debt money is there. But, you know, I think people realize how fast things can turn on a dime now. And so it's just make sure whether Bitcoin's 10,000 or 69,000 that your model, you know, can survive, that you can continue to produce. And so you've seen companies that have had that financial prudence that are, you know, their enterprise values are lower, but, you know, they're going to survive. They have enough cash on their balance sheet. They have runway. And then ultimately what happens is the companies that had too much leverage or didn't have the competitive cost structure, they will exit the network. That will allow more productivity or value to be created from a market share perspective, that's then going to buoy the profits of those remaining miners. And that's exactly what we saw 2017, 2018. When rhodium was started, it was at the end of the big flush. We started it in the middle of COVID. And so there wasn't a lot of difficulty or exahash on the network. And so people that planned prudently, they got to reap the rewards, because it takes 12 months, I would say, at minimum, to raise the capital, put the construction on, put the facility on. And I'd say if it's built correctly, that's more like 18 to 24 months. And now that, the regulatory landscape has changed, there's even more time. There's, more certifications that need to happen, more approvals, because ERCOT is taking, the Winter Storm Uri that happened extremely seriously. And I'm glad that they are.
Yeah, no, it's right now it is a time of rebirth, regeneration.
Yep.
And the people that are here, I had someone ask, "Hey, are you still going to the summit?"
Yeah.
And I said, "Absolutely. This is the time when you see anyone that's building right now, anyone that has the wherewithal that's expanding in this time when everybody else is contracting or being, being protective and shelling up. These are the real players. These are the players that were fiscally responsible and, have a higher degree of likelihood of being here 20, 30 years from now, rather than just the last 3-year market cycle."
Agreed. And also, people that build, not only building from a, megawatts or exahash basis, but are also building efficiencies into their business. How can you make things from an OpEx perspective cheaper or more efficient? The best companies are built during the bear market. And we saw that 2017 to 2020. And we're going to see that again from 2022 to 2024, where I think we're going to have another super cycle because of the happening.
What do you see is when the best companies are built, is it a function that why do you think that is? Why do you think that it's during the bear market that the best players, that the best companies are built?
Because it's required. It's you're making efficiencies out of requirement. You're financially creating more solvency into the business. You're making tough decisions in order to make sure that the business survives. But then you're having an underlying foundation that then is being reinforced. So then the next time that you're moving forward, when margins are better, that, the table stakes, those pillars are already there. So you can, use that as a springboard, as a coiling for when markets, open up again.
The philosophical approach is hardwired into the DNA of the business, of survival, and understanding that things are not rosy all the time, and that they understand that things can be tight, can be very difficult.
I would say it's hardwired into the algorithm. Like, you have that. We're learning, what it means to be truly competitive. The people that are going to survive are going to be the top 10, 20% of the network that have this lower cost of production. And again, that's through operations, efficiencies, and cost structure when it comes to the energy contracts that you've signed at the beginning.
Excellent. Well, anything that we didn't touch base on that you want to touch base on, that you want to get out there as far as rhodium, what rhodium's concerned, where people can find you guys?
We'll be a lot louder, I would say, in the next few months.
Okay.
As we get through the SEC process, and we are hopefully public after this merger's fully closed. As far as just ending comments, I would say what we've seen recently with a lot of the credit defaults, frozen accounts, funds, etc., that is a product of trust and centralization. Bitcoin, the foundation of Bitcoin, nothing has changed. There's not been one single thing other than price denomination in USD that has changed with Bitcoin. And from a exahash, computational power network strength perspective, it's stronger than it's ever been. The amount of wallet users is higher than it's ever been. The amount of self-custody is higher than it's ever been. Like, we're hitting all-time highs in the foundational elements of what makes Bitcoin great. And so what you're seeing here is near-term fear, panic, and anxiety that's coming from trusting centralized sources. So trust the decentralized source, trust Bitcoin. Everything will be all good.
Trust the network.
Yeah, exactly.
All right. Awesome. We'll appreciate it. Thanks. Right. Thanks for stopping in today.
Thank you, sir.
I'm Lee Bratcher, the president of the Texas Blockchain Council. Thank you to everyone who came out to this year's summit, helping us make it the best one yet. Now more than ever, we need professional industry associations like the TBC to help craft effective policy instead of the CEOs of centralized exchanges roaming the halls of various state capitals or in DC. Texas is quickly becoming the center of the universe for Bitcoin, blockchain, and digital assets. If you want to be part of the future that we are crafting here in Texas, join the TBC today.